Joining me today is Zohar Hot, Global Head of Sales Silver Derivatives. Good morning, Zohar.
Good morning, Carl.
How are you?
I'm very good, thanks.
Today on the menu we have a very hot topic, very relevant today, Dodd-Frank and OTC derivatives with a big focus on non-financial companies. What are the implications for the average corporate treasurers that uses derivatives in order to be compliant with Dodd-Frank? What are the main worries they need to bear in mind?
Right. Well, things are changing for the corporations as well as they're changing for the rest of the market. It's important to note that corporations that are non-financial and that are using derivatives for the sake of hedging rather than capital enhancements are exempt from some of the Dodd-Frank regulations. However, the main underlying current is the increase of transparency for both the corporations, for the investors, and for the dealers. Transparency is going to be materialized in two forms. One is that some of these transactions are going to be centrally cleared, some of the instruments, not all of them, by the way. And the other, that some of these instruments are going to be traded on exchanges or swap execution facilities in the case of interest rate swaps. Those are, those rules just recently passed, by the way.
Right.
So those are the main changes.
And does that mean that in the next coming months we're going to see a move from the traditional way corporations use derivatives, mainly using like vanilla products, to something a bit more structured, more sophisticated? Are the banks prepared to do that?
I think that the banks are almost motivated to do that because of the fact that as you move a transaction from a bilateral transaction to an exchange-traded transaction, the amount of margin gets decreased. So there is motivation from the banks to push these type of products. Sometimes these type of products don't need to be pushed because they're just better hedges. But at the same time, there will be probably a mix of exchange-traded products, vanilla products, and more complex hedges. So I do see a mix of these instruments being used by the corporations.
Right. So in case a corporation is looking to do a derivative, and there is going to be margining on this derivative.
Yes.
So how big of a concern will be for the corporate treasurer to get hold of right capital, cash, or collateral? Is that going to be like a headache for the treasurer?
Well, it doesn't necessarily have to be a big headache. It will be higher in some cases, meaning he needs to think about the amount of capital that he will put for a certain hedge. But the banks are pretty much prepared to offer calculation capabilities of what the margin will be depending on where the trade will actually eventually clear. There will be differences in the different margin requirements from different CCPs.
So different settlement prices as well?
Different prices and different requirements for margin. So initial margin is the first difference, and then difference in the settlement prices, because the way they calculate the settlement prices are a little bit different depending on the CCP.
Right. So this kind of leads me to the last question. The advantage of or disadvantage of clearing with one CCP as opposed to another CCP. Arbitrage opportunities might be out there in the market.
Yeah.
So what have you seen so far?
Yeah, I definitely know that there will be a higher level of differences between the CCPs.
Okay.
That's for sure, because of the methodology that the CCP is using is a little different. Some of them will just average out trades. Some of them will use, some type of VAR calculation. Even if they both use some type of VAR calculation, the VAR specifics or the value at risk specifics are going to be different, which will cause a difference in the settlement price. Does that provide certain arbitrage opportunities? Possibly. However, the settlement price is the settlement price, and depending on where you're settling, that's the golden copy. The question is, when are you going to get that settlement price, and in what method are you going to get it? And there could be some differences between the time that you finish trading and the time that you're actually getting the settlement price to your system. There might be differences in those prices, and I think that reconciling those differences is a definite issue going forward.